Hey, what's up? What's up? How's everybody doing? All right, cool. Test, test. All right, all right. Make sure I have everything ready. So let's talk about this market. All right. What's up? So let's talk about a few things here. I know that there's a lot going on, and everybody's kind of like wondering like what to expect, what to look for in the coming days. We do have Columbus Day, and which I think the bonds are going to be closed. All the banks will be closed, so your money will not be settled into tomorrow. So be careful on those violations. Make sure you have some buying power and you don't overtrade because you will get violated on Tuesday. All right, just so you guys know. Um, so that's a quick little update. Let's talk about this week, the previous week. What happened? We had a bullish engulfing candle uh at the beginning of the week. It was pretty intense. I know a lot of people made money on calls, and then I know a lot of people ended up entering puts right towards like midweek, and everybody just wanted to start shorting, which is cool. um but yeah, this right here, this candle was bullish engulfing all the way here. So just to give you an idea of what it kind of looked like, it kind of looked like this. So that was a bullish engulfing until it wasn't, right? A weekly candle, it's not done until Friday. So this is kind of what happened. And we're literally back at the bottom. What this tells you is that even though we ended up being green, even though we had that bullish engulfing, that sentiment for bulls was still there. But because it was still there, these bears in general were a lot more tougher, and they all still came in. So the 10 that came here, there was 20 here, there was 30 here, and then there was 40 more. So a lot more bears showed up on this week alone, which was kind of cool, right? So one thing I did want to talk about though is to show you what the chart actually looks like and what the levels are that people are talking about. Here is your COVID drop, okay? As you guys can see, I already marked it. And this is the base that I talked about last time. I said this is going to be the targets, and we're basically here. It's a retest, a 50% retracement of this huge move that we've had in the past 2 years. So from that COVID all the way into the beginning of this year, right there, that 4808, it's 50%. Okay. If you guys don't know what that means, uh, there's more videos in conservative collectors, or some private videos where you guys will learn more of the educational side. So either way, this is that zone that I talked to you guys in the past, and I told you guys that this would be the next major level, because after a staircase pattern, which is this, you need to find an accumulation, a distribution phase. With all that being said, you don't have that. You can't see that on a staircase pattern. And the staircase pattern, if it drops, that's when it breaks trend, it'll continue all the way to that specific demand level or supply level, whichever one it is, right? Whatever staircase pattern is that you're trading, whether it's up or down. In this case, we did break from a supply. So this whole area here, we kind of just went sideways, and then we came down and we retested. And this is like, again, if you guys go back in all the videos, this is the stuff that I've talked about, I've mentioned. So some knowledge for you guys to obtain moving forward. So hopefully you guys are paying attention and you're not just sitting idle, waiting for me to tell you that, hey, we're gonna go long here and go short there, right? It's all about like understanding of why and how things happen and how they may potentially happen. And if they do, then that's how we react. And if it doesn't, then that's what we should look for. So I'm still looking for these levels, just like everybody else in the market. Most likely we'll probably be down at 32.50 by the end of the year. I mean, who knows? I really hope we're not, just because the stocks will take a huge beating, and probably means that the economical issues are not fixed and it's still all bad, right? There's talks about war, nuclear war, war with Ukraine and Russia, and there's rate hikes that are going to be increased again. Gas prices are shooting through the roof again. So there's tons, all right? There's tons of fears, there's tons of volatility enough so you guys can make good money on downside or upside movements. All right. Either way, overall, since the beginning of the year, we're still on a bearish overall trend. Okay, keep that in mind. So we are looking this week for the break of. All right, so I would say 36. Okay, anything below this 3600, guys, be aware that there's potential short positions that are going to come in, and they're going to think 35.50, 35, 34.50. Okay, that's what you guys should think moving forward. As long as we're at these levels, you got to trail by 50-point bases, right? Again, 36, 36, 35, 50, 35. I want you guys to think that moving forward, because I don't think it's wise to short here at the bottom. I think it's a lot better to short when we have solid green candles, just kind of like how this formed. And even myself, I ended up grabbing puts. Wait for those bases to get created, something like this. Let it go sideways, and then the minute it breaks, that's your confirmation to go short, which in this case, that's kind of what it did overnight. It hung sideways, it went up, and then it dropped on some news, some catalyst, which just gave the pattern more confirmation and direction for that day. So Friday, congratulations to those who took puts, and then sorry for those who swung calls. So that's kind of what happened. So now we're looking for the continuation, right? Either way, we still, what we want to look at is all those bases that do get created. So if you guys just go look at the previous days, go look at those candles that form bases, like right here. Like, look at all these candle bodies here, right? Where are we? We're right there in that same level. Is this considered a base? By no means, okay? The more candle bodies you have, the more structure you have here, the better it is for you to gauge in on direction as to whether we're going to bounce, or we reject, or we reverse, we create a pattern in there, we bring news in there. These are those bases for you to be aware of. Okay, it's called accumulation and distribution here now, with the retest, with a drop base drop, continuation to the downside. So look at it that way, guys. All right. Be aware that there's a lot going on in the markets, but as long as you guys have these structures and you're following those, and you're literally just waiting for those structures to hit and break above or break below, then that should be your entry and direction right afterwards, right? So that's the market, guys. And again, there's a lot going on, and everything is moving. There's banks that are going to be reporting soon. So BAC, C, JPM, MS, WFC, all these banks are reporting, and also Goldman Sachs. I think Berkshire, no, not Berkshire yet, but XLF is going to be moving. And you guys know the deal. Just like we talk about every single time, whenever there's financials, earnings, whenever that week of earnings is, I don't trade those tickers just because the IV goes high. Some of you guys do like the IV, which is cool. I think buying in that low IV makes sense, only to get it into the earnings for the IV to go up, increase, and make you some money. But again, that's not my trading style. For those of you who do trade it, awesome job, awesome work. Just make sure that you're managing your risk properly, and you know that it's a high risk, right? We do have banks, guys, on Friday kicking off, and then we have also airlines, which is DAL, that's going to kick off this week for some airline sentiment. So honestly, in my opinion, I think I am going to play calls. I don't care where we're at on Wednesday. I am going to buy a call position for DAL. I hope it drops down here into this 28 or even 27 so I can grab some calls. I really hope it doesn't go to 31. Okay. If it does, I'm going to try to find some good call positions right here around these levels. Anywhere in here, I really don't care. But I'm going to find a good spot for me to take some earnings call plays. That's going to be my gamble for the week. My lotto, I think that earnings for airlines is going to be good. It's just my opinion from everything that I researched. I think that's going to be the outcome. Okay. Again, it's just an opinion. It's based on the research. It's based on a small bias, I can say. So that's why it's going to be a lotto. Airline lotto, 100% win or lose. I'm going to position myself to what I can afford to lose and not get emotional when I wake up the next day 100% red, right? That's the point of playing earnings. If you can't handle the emotions the next day, it's because you put in too much money that you should have never put in. Whether it was $5 or 1,000 or 10 grand, you put in something that you cannot handle on an emotional basis whatsoever. So again, don't do it if you can't. If you could do it and you know you're gonna have zero emotion the next day when you see zero and not be affected by it for your next trade, then by all means, do what you want to do when you gamble, right? It's just like going to the casino. You put in money in the slot machine and you don't know if you're gonna win or not. You're just sitting there hoping and praying. That's all you're doing. But you know at the end of the day that you're probably gonna lose. So that's what it is. It's a lotto, okay? All right, so that's the market ES and Q. Let's go check out this weekly. I think this is a very important one to watch because, like I talked about in the last video as well, you guys should know that this was the level that I had. All right, this is the only base that's created from the staircase pattern, and this is where we're at right now. So keep in mind, guys, this week for tech will be very important. There's a lot of the tech stocks, FANG stocks, chip stocks that are beaten down to a pulp, like literally, and they could have green days. They could have a green week. Who knows, right? Or they just might trend back down some more. All right, it's very simple. But keep in mind that we're at some levels where there could create some buying, some question of buying, you can say, because it's still not confirmed that we will reverse. Again, just because we're at demand doesn't mean that we have to bounce or reverse. It means that we could have a potential bounce for like a day or maybe a half day. That's it, right? It doesn't have to last the next 10 weeks. That's why we're day traders. We come in and we take a trade for like 30 minutes. We make 20, 35%. Some people make 100 with OGTEs. And then we're done trading and then we don't care what happens until the next day we come in only to trade something over pre-market, right? That's what we do. But overall, again, I want to mention that we're at an important level here for NQ. I don't think dropping below that 1090 will be good for the market in general, okay? The tech can experience some heavy selling right here if it does. There can be some aggressive volatility where we just drop and snap back inside, or literally just have another green candle moving forward, or a doji being created here. Like there's going to be some slowdown, okay? Unless we get some crazy catalyst over the weekend. But there's going to be a slowdown in tech. So be aware. There's going to be adjustments because it's a new quarter. Adjustments because of the earnings season coming up. A lot of people are going to try to buy at good levels. Some people are going to load up on things that they believe in that's going to last through years. I mean, this other than this, if we drop from here, this 1090, okay, there's a high probability that we drop back down all the way down to this like 9K or 1K. It's a huge drop. I'm not saying that can happen with this week. I mean, unless we go to war, then for sure we'll drop heavy. But just keep in mind, if this collapses right here, it's going to be pretty bad for the markets. All right, just an FYI. All right, that's all I'm leaving it to you. You guys do the rest of your homework from here. But just know that below this, the 1090, I am very, very aware that it can get a little ugly. Okay, that's it. RTY is still kind of hanging in there. We're still at these pre-market, these pre-COVID levels here at this 1660, 1670 level. So not much going on there. Like I said, I think I'm still going to wait for banks and airlines and small caps to just kind of report. Other than that, it's a good ticker if you guys want to do day trade this too, right? The Dow, like I said, is still at the COVID levels, still really hasn't moved. So it's important, okay? Right there. We're still that we haven't moved. So again, that 2875, we're just under the 29. Yeah, the 29. It's gonna be, you gotta stay alert, guys. All right. So just so you guys know, we'll set my alert now. This is the Dow, by the way. All right, so I'll set a couple alerts down here. All right. As for oil, man, I posted this in Conservative Collectors. I said here, this week, we're going to start moving forward. We're going to start looking for a green week. And little do you know, from that 80 level all the way back up into that 93, So if you guys were conservative collectors, you should have known that this was going to happen. Give you guys a heads up. So moving forward, this is retail crew FOMO over 89. Now you guys going to see a lot of people talk about oil, and they're going to want to buy these tops. What I'm going to tell you guys is do the opposite, okay? I'm going to tell you guys to wait and let this thing drop. Let it drop down a little bit below 89, and we're going to start looking for dips right below 89 into the 90, okay? That's going to be our dip buy level moving forward, and let retail crew come in and buy these tops, okay? If you go take a look at all the oil tickers, I did call those out in conservative collectors as well. I gave everybody a heads up on this stuff. We talked about this 80 level back in the past. If you guys been following these videos, you guys will know that when I pointed this bad boy out, I said, we're going to start downtrending right here. And I said, this is where I'm going to be looking for the dip buy. Once we start getting here, that's what I'm going to look for. That's exactly what I did the previous week before that. I said, moving forward, we're going to look for dip buys and a continuation for oil. And that's exactly what's happening now. And that's exactly what I played towards the beginning of the week, right? XOM, CBX, even XLE energy sector, all of it is rolling on up with oil. And man, if you guys look at those gas prices, it's hurting, okay? Those things are probably going to skyrocket a bit more. And then this is going to back it up. The whole drop here did not drop the prices in gas in general, but now that we're pushing back on up, we might continue to roll back on up even higher on gas prices in general. So from this point on, start looking forward for call plays on all your oil and energy sectors. All right, that's all I'm going to tell you. You guys do the rest. And I guess I'll see you on the way up as we keep on going the rest of these videos, right? It's just intense on the way that things are happening now, right? So yeah, that's oil doing its thing. All right, so let's take a look at the dollar. The dollar is still aggressive high. It still hasn't formed a base enough for it to drop. So this thing is just rolling on up. The dollar is very, very strong. As for the VIX characteristics, it's still hanging out up here above 30 and 35, right? Almost 35. I think it touched it like last week. What I want you guys to keep in mind moving forward is that the volatility, keep up your volatility tickers up moving forward, because whenever there's a catalyst in the market, the VIX may run up. So as long as these levels stay up here, there is volatility in the market, meaning that there's going to be a lot more bearish position. The minute that this cools off, that's when the IV is dropping on the bearish position and increasing on the call side, okay? So keep in mind, the call side, you could make a little more money on dip buys, because once you get in on the dip buy, the IV is low, and as it increases and breaks out to the upside, then your IV will increase, and then you'll make a lot more profit that way. Just kind of the opposite of the put side, but the put side here will give you a lot more money on breakdowns, just because the movements are a lot more aggressive versus the call side right now, okay? There's no confirmation, like I said, to the call side, the upside, but you still play those dead cat bounces, those are oversold RSIs, those touch of SMAs, whatever you guys is that you're doing. But just know that the put side is still making tons of money right now, and it's high IV. So yeah, just keep an eye on the VIX, all right? As for the 10-year, I mean, this thing is just green, so expect 4.0 or 4.2. This thing to just keep on rolling on up, guys. Like it's intense. I don't know what else to tell you. But anyways, we're gonna click on the 4-hour time frame. We're gonna look at a couple of tickers here that I'm gonna be checking out. So hopefully you guys get a few ideas on what to look for the next week, because again, when I make these weekly watch lists, I stick to that same weekly watch list all week, and I watch these tickers movements, and I get to learn them, and I get to see like what the end result is, and see if anybody even made money off them, right? So first one I want to point out is EMPH. It's energy. All right, so here I want you guys to see some, right? Check out this huge accumulation. All right, it's huge. We were there for about I'm gonna say 2 months. 2 months. Okay. After beating earnings here, It rallied. It tried to make all-time highs here and then drop back down. Here's your drop, base drop, and then now we're right here. All right. So what happens after a huge demand breaks? You need a retest. Boom. That's as close as we got. Okay. And then this happened. All right. And then we try to roll up again Friday, and then this happened. So we're still closing down. So there's still selling pressure from this huge drop here, unfortunately, that I personally missed. I wish I would have seen that, but dang, I don't think I was around that day. So now moving forward, what you want to look for is the next area of demand, which was this previous area of breakout. So as you can see, I already have it marked, which was this huge area. So accumulation, public participation, distribution phase, boom. And now your public participation phase down to the downside. And that becomes your target, all right? So moving forward, I want you guys to see, understand why I'm telling you guys to keep tabs on this, because this may drop all the way back into 220. Doesn't have to drop in the next 2 to 3 days, okay? It can go sideways here, go back up a little bit and drop back down, create a base, and or just literally just simply continue on down all the way to 220 with a straight flush, and then you go back up. But either way, I'm looking for the target of 220. On the way down, though, I'm going to be very cautious because the spreads are a little wide, and they do the premiums are a bit heavy. So if you trade this ticker, just know that it's going to be worth it, but it's going to be a high risk because you may lose tons of money as well. Okay. 250, 240, 230, 220. There's really nothing holding it. There's no demand here whatsoever, so it may stall or stop at any point it wants. That's what you got to be aware of. All right. So EMPH to the downside, rejection back into 220 target. That's my thing with EMPH. All right. The next one that I want to look at is FSLR. I tried shorting this last time. I got stopped out. I lost some money on it, but it's back on my radar just because we're below 130 and then this like 127. Yeah, it's like 127. So we're going to see if this is going to drop some more. Maybe break down with EMPH because they kind of both kind of move in the same sector. I think both of them, yeah, I think they're kind of like solar energy type things. So just do some research on it, right? We're going to look for the breakdown of this. This is your solar. Below 130, 127, we're going to head into this 120. From 120, I'm looking for like 115, but I just want to see this base that's created, break down, reject, and continue to the downside. All right. So that's FSLR. The next one that I want to point out is going to be a pattern play. Everybody's going to be posting this. I know it is. All right. I am not a big fan of this pattern here. All right. It's a head and shoulders pattern. Trade it however you want. I'm just pointing it out for you. You guys know how to trade an HNS pattern. If you don't, please ask one of your admins in the Discord server, or simply just DM me, whatever it is. All right. But that's it. That's it for BA. That's all I'm giving you. You guys can go do your homework on that specific ticker. Costco. I like this because we had a nice pennant pattern here. I actually traded calls right here on the break of like 480. I think it was like 487 or something, and I wrote it over to like 491. So I traded calls right at the open, which is kind of nice. But then this happened. All right, so it's a pattern. It's a break of pattern to the upside, retest failed, and continuation to the downside. So I don't think this double bottom may hold here, but it may continue all the way into 450. So I'm just looking for continuation to the downside for Costco. I'm looking for a nice green candle to get in on a short. That's it. All right. But that's the bias, and that is the characteristics of this specific chart. Okay. Let's go to Target. So Target is basically moving with Costco as well, right? It has a nice channel here. That's what I like about it. So if we continue to the downside with retail Costco, then there's a high probability that Target might break this 151 and drop all the way down to this like 146, 147. So we're just going to be watching both of these bad boys, all right? Yes, I'm giving you guys awkward tickers because I know everybody's posting Amazon, Apple, Google, and AMD and NVIDIA. So I'm giving you guys random tickers this week because it just makes more sense for me. And plus, some of these don't have earnings just yet, and we are in the middle of some high volatility. So I'm gonna leave all the other tickers for you guys, um, and for your admins to post, because if I give you guys everything, I don't want to take credit for a move up or down. uh, but not that it matters. It doesn't matter who calls what, right? What matters is what you're going to do with the information that you have. What matters is the tools that you have in order to understand the tools given, in order to be able to execute properly. If you don't have those tools, if you don't have um, that guidance, if you don't have what it takes to execute, then all the knowledge you have is not going to matter. Okay. At the end of the day, you want to come out green. You want to understand your trade. You want to understand why you're looking at a chart. Okay. That's the ultimate goal. If your admin can't help you, if your server can't help you, then come check us out at Conservative Collectors. Everybody in the server is pretty much helpful with everything that you guys need. And literally just provide so much value so you guys can be successful. But check this out. Look at this pattern that's being created, right? It's not as clear just because we have that top wick and then we have some weird wicks down here. So I'm going to say 176 for short. Okay. Oops. Putting in the wrong stuff here. So 176. This is kind of like being my short position right here. My long position is going to be 180. All right. It's a solid 180. I know it's like all the way to like 181, but it's a solid 180. Just because it's a psychological thing. So 180 long or short, all right, you can short it here and then use 181 as a stop, whatever you decide. Or we just short at 176 break. It's the pattern breakout right here, okay? So whatever happens here, I don't care. I have my alerts to the downside. I just think it's more valuable to the downside, even though it's holding. Either way, I got to set alerts on the top too. But yeah, these are good tickers. Like I said, I'm giving you guys some random ones this week, and some good movers that have potential to make some good money, right? But that's cap. Let's go to the last one, but not least, V. I want to point out something very important here. It's we broke from a weekly demand a while ago. Okay, this was like last week, and I'm sorry guys, I didn't make a video last week, so kind of sucks. But either way, we did break down 190 and we're below 190. All right, very simple. The last one was 187. All right. So now you guys can see that. I want to show you guys. That was the last demand. All right. So since we were at the last demand, look what we have now. All right. We have that channel that rejected. We have that weekly demand that broke. We have the weekly demand that retested. And now we have a channel or a bear flag, whatever you want to call this, at weekly supply. So this is your weekly supply now. All right. That's what it is. Unless we go above 190, we are still bearish on V. So look for a breakdown of 182 or a break above 184. All right. This is going to be your call play here. And this is going to be your put side. That's it. All right. That's how simple this ticker is going to be. You guys make it as complicated as you want, but this is how the trade is going to be. Over that 184, we're respecting that channel to the upside all the way back into 190. Below that 182, we're breaking that bear flag. We're confirming the downtrend. We're confirming that rejection and that supply and the pattern play all in one, and we're dropping back down into that 175 level. Okay. Sorry, 176. So that's it. All right. This is like one of the best ones that I like so far, other than EMPH and Costco. I think these are great names for you guys to make some good money off of. If you like them, please keep them on your watch list. All right. Don't wait for me to tell you to go long or go short. Make sure you set those alerts. If you don't set the alerts, that is on you. All I did is give you the potential of a good trade at a specific level where you can go short, where you can go long, and it's up to you to execute. Be confident in what you see and be confident in the tool that I'm providing here for you today, okay? All the information you can retain and do what you want with it. You can share it with somebody else, tell a friend, whatever you want. But at the end of the day, I hope you execute well. I hope you make money at the end of the week. I hope you can grow your accounts by 50% this week, or even by 5%. Whatever it is that you do, please manage your risk properly, stay green, be patient, and don't buy tops. Whatever you do not buy tops. Okay. Um, but other than that, guys, I hope these watch lists help. I hope you guys make some good money, and I will definitely see you guys again on Tuesday. I'm gonna do a follow up on Tuesday just so everybody knows. So remember, tomorrow, Columbus Day, your money does not settle. If you trade your whole account on Friday, don't trade tomorrow. It's gonna suck, but that goes part of doing research, right? Other than that, I'll see you guys on the next one. Stay green, and thank you for joining. Peace, peace.